Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, and amazing people all over the world of crypto and blockchain. Today, I have another amazing guest. He is the CEO of Metaplex. His name is Stephen Hess. Stephen, welcome to the show.
Hi, Jamil. Thanks for having me. I appreciate it.
Very welcome. Happy you're here and look forward to speaking with you today. So let's kick things off, and I'll ask you first. The first question I ask everybody is this, is what is your background, and is it a logical background for what you're doing now?
I grew up in Silicon Valley, so in Los Altos, Mountain View era, somewhere between Google before it took off and Apple campus and Stanford. I ended up studying at Stanford Symbolic Systems, which was at the intersection of design and math, linguistics, computer science. It's a study of information and how we have these new technology systems that allow us to use transistors and digital infrastructure to really coordinate on a global scale. And that was part of both my interest in AI. Symbolic Systems was the first AI program at Stanford, but then later blockchain. And blockchains are an incredible system for human coordination. It's the next evolution of the base level information technology that powers society, finance, commerce. And so I would say I've had some like detours and adventures along the way, but from my core interests early on, I couldn't imagine being in a better spot and having a chance to help build this next generation of tech with so many incredible entrepreneurs in the Solana ecosystem and abroad.
Awesome. Awesome. Um, so I want to hear more about the Solana ecosystem. I do want to know, though, first, Metaplex. What are Metaplex and Genesis all about, including the evolution? And why is Genesis a new paradigm for token launches?
Metaplex is the standard for creating and launching tokens on Solana, and now the Solana virtual machine more broadly. So similar to the role that ERC20 or ERC721 plays in the Ethereum ecosystem, we provide the information standard for the digital asset economy. And so at this point, it's been over 900 million NFTs, 20 million tokens, like 99% of the digital assets on Solana have been created and are powered by Metaplex. And that includes the backend infrastructure that powers wallets, exchanges, marketplaces, DeFi applications. And so we provide both tools for founders and creators that are launching their projects and how to do it in the right way, as well as providing the developer infrastructure for those assets to get integrated across the ecosystem and for people to build services and products on top of them. Genesis is really the continuation of that mission and providing a fully on-chain framework for token launches. And so we've just seen like the disastrous celebrity coins and rug pulls and like I think everyone's familiar with those stories because in many ways that's defined the public narrative around crypto. And so, our commitment is to remove any excuse for there to ever again be a botched token launch and to solve that with transparent on-chain contracts and technology. So everyone's playing the same game, everyone knows the rules of the game, and that we're also helping entrepreneurs then build valuable assets that have real product market fit, revenues that connect to their tokens. And so when you hear the Solana ecosystem talking about internet capital markets and that next era, it's really about building fundamental value and assets that are tokenizing revenues. And so we've really found an opportunity to build systems that make Solana and can continue to place Solana as the best place for those founders to build and launch their tokens.
Then I'm going to have to get into a myth or concern. You have 10, the myth is there are 10,000, it might be true. There are 10,000 token launches on Solana per day.
I think it's more than that. Yeah, I think it's more than that.
Okay. And a lot of them are just meme coin money grabs, without any usage of the Solana, you know, uh, blockchain itself at all. You know, how do you keep up with the launching? How does that not tear down the blockchain, the Solana blockchain?
Well, I think right, like with with meme coins, I don't think they're all like money grabs and teardowns to start. Like I think I would challenge that idea in that I do think what you see in some of the best meme coins are on-chain communities that are being built around creative works, and that's happening organically. And then you see project like meme coins like Bonk actually then being able to use that community to bootstrap the development of products and technology and merch and branding and events. But it is true, like there's a really large volume of what are these like mimetic signifiers that become these tent poles for these social groups, and it's a game that people are playing. And ultimately, I think with what platforms like Pump were able to achieve, Pump uses Metaplex. All of the tokens on Pump that are created are powered by Metaplex. And what they've really been able to accomplish is helping create a standardized set of rules and mechanics for token launches for meme coins. And we've seen that there's really an audience there that enjoys that. And I think while that's part of the ecosystem, that in parallel, you're seeing more of these fundamental value projects and products that are being built around that. And frankly, the meme coin era and the NFT era before that, while maybe not like taken as seriously in some circles, really has been an instrumental part in building the infrastructure that's now allowing for this ICM era.
Right. So I think, a lot of when I look at a lot of other coins, there's the strength in those coins are adoption by institutions. Okay. For Solana, it's adoption by retail, adoption by users, and adoption by Pump. So my question is what do you think is the best way to to strengthen the Solana blockchain and the Solana ecosystem? Are we on the right path, or should there are other things that they should be doing right now that could even strengthen it further?
I think Pump really has figured something out with streaming. There's a lot of room to run in terms of how you would build a tokenized social media product that would compete with Twitch and Kick. But even in this very like early stage, where the token and the feature set that they've deployed is pretty streamlined, you're seeing the energy and the excitement for that vision. And ultimately, the economy of streaming is all based on digital goods. It's subs and like different status indicators, different types of emojis and sticker packs. And the blockchain is great for those types of assets. And tokens are a great way of provisioning access, where, if you have a certain amount of tokens, you get to chat, or maybe you have an even larger amount of tokens, you get into the private Discord channel. And so I think their evolution expanding from meme coins into streaming is really significant and underreported. Like Pump is, by the numbers, arguably the most successful software product ever. And I think that oftentimes like the success that they have gets overlooked because it's meme coins and it's considered to not be serious. But I think that like on-chain community concept is fundamentally what's happening. And now they've seen the opportunity to build on top of that into this content and creator coin era. And so I definitely view that as a durable trend. Like, I don't think that this is like a flash in the pan type of phenomenon. Like, I think they're here to stay. And I think both the meme coin communities and tokenized creator coins and social media is a durable and inevitable part of this phase shift.
I did not know about the streaming.
The streaming's great. You should go check it out. You can download their mobile app. I feel like I'm giving a commercial for them right now, but like it's really cool. There are like a number of those creators, and what we saw with Metaplex as well is like we're now we're shipping and launching like projects like Collector Crypt, which are RWA platforms for tokenizing collectibles and Pokemon cards, and Portals, which is a gaming metaverse. We have these like really kind of strong or DeFi Tuna, which is this like innovative AMM with limit orders. And so, there are a lot of these like very sort of fundamental oriented projects, but the only reason we're here is because in our very early days, there are a bunch of artists that were like, we want to sell our art on chain. We want to bring our communities on chain. And so I actually view that as a really positive sign. Like if you see early artists and creators like taking a shot on early technology and with real curiosity experimenting with it, then in crypto we've seen how that then opens up the creative space where then these larger like more serious kind of quote unquote projects are able to come in because there is the capital base, there is the infrastructure, there is that social fabric. And so in many ways I think that was like not just like random. I think that was actually a really important part of the community building and evolution of both the Solana ecosystem and many of these platforms that are now ready to handle like the institutional adoption and BlackRock tokenization and equity securitization and tokenization. I think yeah, my point is like I think those trends are important and like they deserve their flowers as well in terms of being part of the story that has made it possible for us to now have these bigger opportunities.
It sounds promising. It smells really good to me. There are some things that are not so good still going on, right? And I want to get into those. I want to get into three concepts. Three. There might be more, but three I think off the top of my head is sniping, front running, and intentional failed tokenomics. Right? Why do these three areas continue to plague our industry, and how could we avoid them or eventually stop them altogether?
So sniping is like for people that aren't familiar, this is when you launch a token and you're either setting up an initial AMM, which is a trading protocol, or you're launching the token on what's called a bonding curve. And someone can come in and they can buy up all the tokens. And then as everyone else is trying to buy, and maybe they're submitting somewhat blindly, just trying to get into that initial sale, that person is already selling and dumping. And the problem is that in those opening moves, even if like this wasn't coordinated by the founder, the project had nothing to do with it, it's literally just a market participant that is like very savvy and knows how to get their transaction in first. It doesn't matter because to the community, it looks like a rug. They're like, why is this thing down only now? And that kills your early momentum. And so this is one of the big structural problems that we looked at when building Genesis, which is making it impossible for that to happen. There are a lot of ways like disincentivizing it, and there's sort of concepts where you can like tax certain types of traffic or bots. But we actually started from the perspective, which is like assume all the bots. Everyone has all of the bots, the best bots, the most advanced bots. How do you make it structurally impossible on chain for there to be sniping and front running and for someone to have an unfair advantage in the token launch? And so we designed three different mechanisms for that. Pre-sales, which are just fixed price sales with allow lists. There's the launch pool where anyone can deposit into the pool during a period of time. Everyone gets the exact same price. And then an on-chain auction where you can express very specific bids, and then the auction clears at the lowest bid that fills the block, and everyone gets the same price. So like the key concept there is the rules are transparent, the token economics are transparent. There's a sufficient amount of time for everyone to participate, and then everyone starts as part of that launch group. And what we've seen with some of these early launches, Collector Crypt was the first to deploy the launch pool contract, is that there were 700 people that participated in a launch pool. They all got in at the initial pre-sale price that cleared. I think it was around like a 50 mil market cap, and then like almost overnight, it felt like the channel had changed where everyone on Twitter is talking about Pokemon card tokenization. And now they're not just seeing like their brand and their message expanding, they're actually seeing like new users and they're seeing their revenue numbers go up, they're seeing new usage. And it's like that incentive flywheel that makes tokenized projects just demonstrably better than other forms of organizing because you're able to bring your community in early and genuinely give them connection to the upside for the product growing and for that incremental user to come on to that platform or service. And so like the key concept here is actually two things. It's how do you remove like just all of the mess that has caused these tokens to go to zero and create fairness. But then like the upside opportunity is that when you have that, you're able to unlock the magic of tokens, which is this organic incentive alignment wired across this global community. And I think that's why we're going to see projects, founders, and technology that are launching on blockchains just outcompete these other centralized efforts because that allows you to just activate your growth in a way that's just not available to other projects and teams.
Well, the centralized efforts, they still have that, select few. The if you get in early, you get it. They can easily rug pull more easily than if you implement the three approaches that you've implemented. You know,
We're right. Like it's different, these are different systems, right? And I think there's been a creative kind of process around when you really start from first principles. You have decentralized crypto commodities, protocols that are globally distributed, that are tokenized. Like, how do you basically effectuate collective action towards a shared goal? And so while some of these things rhyme, I think the mechanics of that economy have ended up being very fundamentally different. And like the incentive alignment between token holders is a big fundamental difference. How liquid and how accessible that incentive alignment is very different. And then the mechanics of DeFi are profoundly different. Like the ability for projects to monetize their liquidity, get exposed to the economics of the trading revenues or through like LSTs or their own stable coins. Like we're seeing the ability for these projects also to better share in the upside and the value that they're providing to the infrastructure that they're using. So I think it's the combination of those two things which makes us incredibly confident that Silicon Valley is coming on chain, like the future of technology development, like the breakout hits in terms of innovation are going to happen on chain, and we're going to see the progressive decentralization of those systems through these crypto protocols and tokens.
got it. Let me see. Taking an example of the three areas that you built, like I want to compare that to something where I've lost money on, which is the World Liberty Financial. So people were in that early. People were in the pool early, and then it launched, and then it went down. I happened to buy, on a Dex the wrong one, so I lost $400 right away, which is I was prepared to lose, right? But a lot of people who got in early, who had the opportunity, who was part of that pool, they lost immediately too. So how have your creations, how do they differ from what that example was?
We sometimes joke that the next product that we should build is a token standard where the tokens only go up. There's definitely product market fit for that, where, but in seriousness, like I think, we should understand that, like as is true in startups, like these are high risk endeavors. Like startups are a blood sport. Like you are by nature signing yourself up to go disrupt an incumbent industry and you are betting against the odds. You're betting on the founder, you're betting on the vision, you're betting on a technical thesis. And so I think it's important for people just participating in the space to understand that, and like to understand where they are on the risk curve in terms of what they're participating in, and like go into that with clear eyes. But there are obvious things that can be done to just to avoid these inefficiencies that break trust. And so in the initial launch process, that's why we want these projects to have ample time for people to participate. So you can deposit and withdraw out of these pools, you can bid, you have time, and then everyone gets the same price. No one has like some ability to game and get an edge that's better than someone else. When you're actually trading, it is a different ball game. And like there are, aggregators that sit on top of the dexes that help you get the right, get the best price execution. And and so I think actually that structuring is the solution to what you're describing, which is ultimately having aggregators that are looking across all of these different pools and then helping you route to get the best price, is going to help with trade execution ultimately and prevent these like very quick arbs or like price differences that exist between pools. And that's actually structurally another one of these amazing things about crypto, which is we're now seeing DEXs that are launching that have no front ends at all. because they're able to get distribution through the aggregators. And so they're able to just come in, let's say they're seeing inefficiencies between pools, like the way that you're describing, they can actually spin up their own pool and be arbing between in order to give efficiency to the aggregators without having to build a web app or anything. Like they're literally just operating at the level of smart contracts to help smooth those differences and then help the end user get better pricing. So ultimately, I think it's a factor of the size of the project and the amount of volume and liquidity in the ecosystem. And again, we're early, so like these assets are volatile. Like we should understand kind of where this stuff lives on the risk curve and context to the broader economy. But those things will get more stable and will get better as the size of those markets increase and the technology improves.
You said smart contracts. So how how would um how would those how would audited smart contracts be helpful for unsuspecting investors?
So in crypto, I think people are willing to play a number of different types of games. Like there isn't just one way of launching a token, and I do think that depending on your audience, you're going to have a different approach. So with an auction makes sense for a project that's really trying to appeal to an institutional audience. These are fund managers or investors that are underwriting projects. They're constructing valuations and they want to be able to express a bid, but know that it's going to execute at a very specific price. And so an auction gives you that level of sophistication on chain while having the benefit of the transparency and this equal cohort launch pool exiting that launch period. A launch pool optimizes for distribution. So if you're really trying to get the broadest number of participants and give anyone in the community who wants an allocation the opportunity to get in, then the launch pool allows for that. But the price discovery is a little bit more volatile. You might not actually be able to predict exactly where the pool will clear at the end of the day. So you're taking on a little bit more risk potentially in participating. And so the key theme is make it transparent, make it on chain, make it open to anyone with an internet connection, and so that at the very least, everyone knows the rules of the game and there isn't an unfair advantage. And then even better, provide the right mechanics so that people feel really excited to go from that launch period into the next phase because the TGE is just the start. Like you have to then really build momentum and continue to carry that into the following months and years. And so, our goal is to make sure that the token launch doesn't get in the way of that, but also acknowledge that that's really when the work begins for many of these projects in terms of then taking the next step.
Got it. Got it. So I have a hypothetical because I'm not anywhere. This is nowhere near my radar right now, but it could be someday, maybe 5, 10 years from now, is a crypto hipster coin.
Let's
You
do
know,
it, man. I lived on Valencia Street in the Mission for a couple of years. Let's do it, man. We'll go to Dolores Park. We'll live stream your hipster token launch.
okay. Maybe I'll move it up for a few years. But I want to find out like what would be like the ideal, like the best way to launch that token. Like, what would be the best approach, to get something out there?
So, I mean, again, like I'm probably filling in a lot of white space here for you, but I think where your token probably would sit would be as a creator coin. You would be launching a token that gives your audience, like the people that are listening to this or that are following your work, an opportunity to be part of your journey. And so you could say, hey, look, like I'm going to be taking X% of the revenues from my podcasts, from my YouTube streaming, from my Spotify streaming revenue, and that's going into the token. I'll be doing monthly buybacks, or I think Spotify's like 45 days or something. So maybe it's like every couple months, and then I'm making a percentage of this token available in a community launch pool, and anyone who wants to be part of it can participate, and it'll clear at whatever price you decide it's worth, and then we're off to the races. And so what you now have is you now have an audience that has had a chance to buy into your success as a creator and to be part of that journey. And that when they're thinking like, hey, should I share this clip? This is a cool clip. maybe it's not, like 100% of the story, but maybe it's like the extra nudge that makes them go, I might as well. Like, I'm a token holder of the hipster coin as well. And so I think it's, that extra nudge, which oftentimes makes the difference between someone sharing or engaging with a piece of content or not. And, as you know, with kind of these viral growth factors in social media, sometimes it's, if those marginal differences can make the difference between the content really going and not.
Got it. Got it. I don't want to fill in white space. So,
This is
but I
good.
do
This
want
is a good new segment. It's like softball a token idea to Steven, and I'll drop your token economics in 15
to.
seconds.
No, I like it too.
You can
So,
you can you can bring me back for it.
thank you. Yeah. So I do want to talk about something that's kind of important because I see it a lot. I see a lot of it's less prevalent now, but it's still prevalent. Is the word hype? So why is technical excellence? Why does it trump hype? Why is it more important than hype?
I don't know if like one is more important than the other in the well, all right. So I will say actually, yes, I have a point of view on this, which is the technology and product market fit is the fundamental piece of building long-term value. Like find a customer that has a need, build a product that meets that need, find an economic model that allows you to sustain the work around delivering that product and service. And if you can do that successfully, like you will make it to the next phase of the game. Like there's this kind of sort of Jensen interview where he talks about like startups are all about like having another quarter to like play another game on the pinball machine. And so it is true. That's why it's most important. It keeps you in the game. And so regardless of the waves, the hype cycles of crypto, that fundamental value, that ability to differentiate with your product or service, to use that to generate margin and revenue, and then connect that back to the economics of your token will let you survive any bear market. That said, like crypto and the markets in general are highly driven on vision and hype and beta. And like we see this in the public markets. Like I would love to buy Tesla. Tesla is an amazing, it has everything that I want in that company. But I look at it compared to Google and I'm like there's they have the hype advantage, right? It's like the hype multiple, right? In terms of how their revenues are looked at and positionally. And that's been incredible for them in terms of them being able to capitalize and then build the company. And Elon is exceptional at that. And so, that can't be discounted. And you see this in crypto. Like, I'd be lying if I'm not looking at these like multi-billion dollar protocols that have 10% of our revenue and being like, what am I missing? And really what that comes down to is like storytelling, it's vision, it's clarity, it's confidence. And so that is really an important part of launching a project, running a project is being able to tell that with clarity and in a way that people know where you're pointed. And if they then, want to be part of that journey, then they have everything they need to pull the trigger and be like, okay, this is the project that I want to, throw in with and support and be a part of.
Awesome. I like your point of view on it. That's good. There was something that happened this past week, and I wouldn't say it's hype, but we still have as an industry, we still have things called hit pieces. And there was a hit piece. It was Litecoin and Bitcoin. The Litecoin founder went on the interview,
Oh, I
spoke
saw
for
this.
yeah,
Yes.
spoke for an hour, talked and the Bitcoin people took 40 seconds of that 1 hour interview and twisted it, took it out of context, and made it a hit piece and an attack on the founder, Charlie Lee. So how do we avoid things like that in this industry where you have unethical reporting, taking place? And how do you fix it? And how do you say, okay, the technology's there, regardless of your hyper hit piece?
Yeah, it's the worst. It's tough. Like like we've dealt with this, I think, like any crypto project, which is you see FUD on Twitter. It's like what I can sometimes called the like, the crisis industrial complex. And it's just false, it's misleading, it's wrong. And you're forced with this decision, which is do you engage with it? And effectively give them what they want, which is the engagement, or do you ignore it? And it's not an obvious decision at times. I will say that, like, I'm definitely more in the camp now of just engaging with it than ignoring it. Because the truth is that people will see all sorts of things on Twitter and on the timeline and believe it. And unfortunately, the way that like social media algorithms work is that you could be living in a bubble where that view would never be challenged. It just gets reinforced, or maybe it just shows up once and you just believe that. And so I do think it is what, and it's kind of like one of the less fun parts of the work. Like part of your job is to kind of get in front of that and engage with it, try to find a way of making it lighthearted while at the same time setting the message straight. But unfortunately, I don't think there's anything you can do to fix it. Like this is free speech. This is part of what it means to live in an open society. But you gotta just sort of approach it, head on, not let it emotionally affect yourself too much, and then, just keep moving. I think that's probably the core, core thought I'd have, which is, crypto is a long game. It's easy to like get really hot, get really cold, get kind of, to get demoralized, and that's when you start making mistakes. You start taking on risks that you shouldn't. And so, for any founder who's like experienced that or going through that, like my advice would be just like stay true to your path and like don't let it cloud your judgment. Like check in with your own emotions and just keep pushing. Like keep focusing on your customers and like redirecting back to that as you can.
Yeah, that's good. That's good advice. So let me I think that's a good idea too. I'm going to take that on. Um, but I do want to come back. I do want to come back to technical excellence, and I do want to come back to the fact that first question I asked you was about myths. The current myth is still a myth, and I haven't seen it in 3 years. I think is Solana is always down. It always has downtime, and I haven't seen any downtime in years.
Where's the downtime? Where is this downtime?
Yeah,
Is the
so
downtime in the room with us today?
yeah, so I'm like, you've improved the technology dramatically. That needs to be the new fact and not a myth. How do you plan on keep improving the dynamics and the excellent execution of Solana going forward?
So I think for people that are tuned in to the technical conversations at the L1 level, like the Solana core team continues to be really aggressive in improving the performance of the network. Like there's a pretty profound change that's being proposed now to how account rent and state management works, for instance, which is how do you make the data footprint that's required for the validators more efficient so that they're not having to store all of the entire state, but just what's being accessed in real time. And so, I think improvements in terms of, Alpenglow, the new consensus mechanism. I think client diversity with Firedancer has been discussed as a way of improving network performance, but we haven't seen that yet. I think what we've seen actually is like the Agave team at Onza, like continuing to push the performance of their client as well. And so, I think, and I think that's healthy. And maybe that was the goal, is just to have there be some sort of the network having alternatives and them each kind of pushing each other with their own implementations. So we expect that the L1 will continue to improve. And then the way that people are building programs, deploying those programs, the read layer, the way that you index and fetch data, the way that you store information is also improving. And so, and then there's also the multiple concurrent leaders proposal, where you could have multiple validators that are validating blocks or constructing blocks at any point in time. And so there are a few of these like actually pretty significant large improvements to the network that are underway. And I don't think there's any slowing down from that core team in terms of, again, pushing the network to as fast as the speed of light will allow. And I think for the folks that you talk to that work in this, like, there's an endless list of opportunities and work there they see to get this engine running even faster.
Sounds awesome to me. So I want to thank you very much for your time today. This was an enjoyable conversation, and it went by really fast. So thank you. I have one last question. It's easy. How can people find out more information about you, about Metaplex, about Genesis? How can they participate? How can they do that?
I appreciate it. Yeah, thanks for having me. If folks want to learn more about Metaplex, you can check us out on X at Metaplex or metaplex.com. If you're a founder or project interested in launching your token or building on Solana, please reach out. We're happy to help. And if you're in the ecosystem and looking to build with the digital assets that have been created by teams and build applications and service, we have developer tools that can support you in that as well. So again, appreciate it, and thanks for having me on.
Awesome. Thank you very much for your time today.
Cheers. Thanks.